Right. Welcome, everybody. Thank you so much for tuning in. Whether you're looking at this live or you're looking at this as a recording afterwards, it's still going to be relevant, I promise, by the time you get to check it out. But this is our Buying After COVID-19 Buyer Seminar. We have a full, program kind of ready for you guys from A to Z to try and help you guys get prepared for when it is that you're looking to purchase properties. I want to introduce myself. My name is Andrea.
I'm Angel.
I'm
Anne-Marie.
Sorry.
And we have a special guest here with us. It's Brian McKim with House America Financial.
Hi, everyone.
He is a wonderful loan officer who's going to be also giving you guys insight on that aspect of what's going on in the market and how to best prepare, and including everything that he would need, for example, to get you approved for a loan. So I kind of want to just jump right in. I think I'm going to start out by kind of just seeing what's happening in the market right now. The girls know that the past 4 days for me and all of us have been probably the most busy days I have ever had, even before this whole COVID thing broke out. I just got a new listing on the market, and it's since Wednesday, it's been listed. It's Saturday now. Wednesday, Thursday, Friday, and Saturday. I've been there from the morning until late afternoon. Every day, just waiting, not waiting, but like letting in 30-minute increments, people coming in to check the property. So there's definitely a lot of activity going on. Properties are getting multiple offers. Appraisals are coming in at or above. We don't see anything really coming in too low. Prices are still there. And business is as usual, except I think it's just the serious people that are out there. So it hasn't slowed down, not even a little bit. But that's what we're experiencing right now. And I know, Brian, you probably have some to say about this too. Your experiences about this. I'd love to hear what you've got to say.
Yeah, it's certainly been a busy and interesting last month or so. Rates were really low in early March, and they went up in mid-March, and now they've come back down. So rates are fantastic. We're still, closing deals. Appraisals, for the most part, appraisers are still going out to the properties and doing full inspections with face masks and with booties on and hand sanitizer and all that. But we're still operating very similar to pre-COVID. Deals are closing. There is a lot of activity out there. I'm seeing quite a bit of offers going out, offers being accepted, and so it's really good. Generally speaking, I think with all lenders,
Got that, Brian.
with all lenders, I think that it's a little bit more intensive right now, just in terms of employment verifications and verifying income. I mean, unfortunately, there is quite a number of people that jobs have been displaced, or they're on furlough, or their hours have been cut. So all lenders are really having to go the extra mile, even more than before, to really verify that everything that was used during the pre-approval is still valid at the time of funding. So I only mention that just to set the right expectation. I think no matter what lender is being used, it is a little bit more intensive these days because of COVID, but by all means, loans are still being done. They're still getting appraisals in, and we're working hard.
Absolutely, yeah.
Thank you so much for that. I was going to say, that's a great segue into what I wanted to touch on, which is, real estate being an essential service, and what does that mean? I know a lot of people have had a lot of questions on our Friday night social hour, and a lot of them pertaining to how does this impact real estate as far as, being in a pandemic. And so I just want to say that real estate has taken everything has gone virtual. We still do have in-person showings with proper precautions. Some listings are requiring that you have, employment verification and a pre-approval before you even go look at the property to make sure that you're a very serious buyer and that you're still able to get approved for your loan. Regardless, it's max 2 people to show at once. Everyone's to wear face masks. gloves, there's hand sanitizer. Like, we're definitely taking all of the precautions, but we are streamlining the process to do virtual before we get to the in-person showing. So typically what you'll do is you'll put everything online buyer consultations, everything via Zoom. And then once we get to like a place where you're very serious about seeing something, then we would preview on your behalf, do a virtual tour for you. And then once you're like ready from there, then you do an in-person tour. And that's just to just be responsible as real estate agents and to do our part for like social distancing and making sure that, you know, that we're fulfilling our moral responsibility with that. And honestly, I know we talked about this before, but we love what it's done to the real estate market because it's really made the process more efficient. I feel like
Yeah.
you say that is like it saved a lot of time in traffic, it saved a lot of foot traffic, a lot of just a lot of things I think are going to remain after the pandemic and the quarantine process is over for a lot of people. And I think the virtual aspect is going to be a perk.
Can I make a really quick comment on that, Angel? Talking about efficiency, I think the only buyers that are out there right now are really serious buyers. As an agent, I appreciate that. Why? Because, you know, we're spending a lot of time. Like I said, like I've been spending entire days trying to have segments of people wanting to come in at a separate times and stuff. So I had an agent who had originally reached out to me to want to show, and then she turned around and said that her client didn't want to sign that entry form that you mentioned. And so she's like, I'm not in a rush to buy. So I don't want to sign it right now because you don't know, I don't know, for whatever reason. But that was a non-serious buyer holding back, saving everybody time, you know? So it's just efficient all around.
Agreed. I do want to make sure that we do stress it though, that we are definitely doing our part. So it's not just moving as it was before, although it's still really moving. And like Andrea said, like we've been busier now this past week than we have, honestly, in months. I feel like it's been crazy and a really hot market, but it just really has, I think, honed us in on our virtual skill set, and it's just set a standard that this will be something that's an option for our clients if they choose to do a virtual, you know, buyer's consultation to save time and virtual tours after this happens. If it's something that they're interested in, it's something that now we have perfected and we're really prepared to do.
Yeah, I wanted to just touch up on credit. And I know a lot of people start with, you know, what's my credit like? Where do I start? I think that a lot of people like to start checking their credit on their own, but be aware that the credit scores that you pull will be very different than the credit scores that a lender can pull. So I think it's very important to find a lender, get with them first to see where you stand. That's in my opinion, always the best start. We actually will be releasing a video this week with credit consultant Sandra from Fix Your Credit Consulting. So we will actually share the link in the comments so you guys have access to that as well.
Yeah, if you're interested in credit repair, she's a great resource to have. And I do have a question for Brian on this topic, just to chime in. Recently, I had a potential client reach out to me and ask, is there a website that they can use, which they've came across Credit Karma, where it's kind of like a loan approval process without giving all of your information? And is there one that they can use without giving their phone number and their email address if they're not ready for that step yet because they're worried about being bombarded? Is there something that's a credible source for them just to kind of see where they stand with their down payment and things like that?
Yeah, that's a great question. And I would say in terms of credibility and getting the right information, I would say reaching out to somebody who's local is probably the best way to do that. I would say going to an online website, especially if that website is going to try to give some sort of pre-qualification or pre-approval without looking at the credit and without looking at actual documentation. In the end, I think it can be really misleading, and I think it could be dangerous for the buyer as well as the agent because there could be some misinformation there. So, you know, there's a lot of really good lenders locally that would be happy to have a 10 or 15-minute phone conversation with the potential buyer and go over different options and, you know, go over different rates and payment scenarios based on a verbal conversation without looking at actual documentation and without looking at, pulling a credit report. But I would say dealing with some local human being is probably a much better way than trying to find a website to do that.
Now, touching off that, if someone gets in contact with you, just so everyone can hear it for their own ears, and they like go over all of this, they do a 15-minute consultation with you, are they spammed with anything based off the information that you give them, or pressured in any way? I just want them to hear it from you.
No, there's no spam, there's no pressure, there's no obligation. Many customers get pre-approved with us and close with us. Many customers get pre-approved and they go a different direction, and that's just the nature of how things go. That's totally okay. There's no spam, nothing like that. So yeah, would love to have the conversation. But if not me, then just somebody local, some professional who has experience to kind of walk somebody through the process is so much more valuable than a lot of these online sites.
Yeah.
Agreed.
Thank you for that. I just wanted to clarify that because I know it's just a concern from some people. I think it's an
Your realtor should be able to refer you to somebody too,
Right.
Yeah.
And I think a big important part is the connection that you have with them, but also if you're not happy with them, don't go to 5 different places, because they're going to continue to pull your credit, which can bring it down. So that local connection is always good.
And in terms of rate, I feel like I see a lot of people jumping around trying to find better rates. I personally would rather have my buyers work with a really strong lender with a really tight team to get us through escrow. And then afterwards, if they want to refinance with somebody with just a better rate, that's fine. But the relationship and the strength of your lender is almost as important as the strength of your realtor in the transaction, because things get thrown at us that we don't foresee all the time. And you need to have your team that's like, we got this, turn around, oh, this happened, we can change it up here and fix it, and we can do this quick and that quick, or whatever it is. You need that type of like kind of agility in your
Yeah, I think that's a really good point, Andrea. And I think there's a difference between wanting to shop around and trying to find a competitive rate and making sure you're getting a fair deal and a good deal versus looking online and feeling compulsion to find the cheapest rate in America or the cheapest rate on Google. And I think some buyers with good intention get so fixated on rate, but in this market, I think sometimes chasing the cheapest of the cheapest can put, it could jeopardize the transaction, because they might be either a switch type of situation where some lender is advertising online, but they don't really come through with that rate that's advertised, or it's a very low budget type of setup of lender out of state call center, and they may not be used to the speed of purchase transactions here in Los Angeles. So I think, looking around, making sure you get a really good rate, I think is important, but just be, I would say, cautious on how much you're gonna rate shop, especially if it's
I agree completely.
Also, sorry, I was gonna say also, it's not necessarily the rate, right? Isn't it the terms? Because let's say I move from wherever, right? I know I'm only going to live in LA for 5 years, right? And then I'm going to go back to where I came from. But during those 5 years, I don't want to rent. I've always wanted to like keep a home in LA for whatever.
Right.
So if I were to move here for 5 years, a 30-year fixed is not the best term for me. So I can go and look rate, but maybe a 15-year, adjustable rather than a fixed is better for me. So isn't it not necessarily just the rate, but the terms?
Yeah, definitely. That's a very good point, Anne-Marie. It's not only terms, it's also cost. So every rate, there's 2 sides to the coin. There's the rate, and then what's the associated cost. In your example, if somebody's only going to be in Los Angeles for, let's say, 5 years, and they get a rate of 2.1%, but they have to pay 3 points cost to get it, they're going to spend a lot of money
People.
at closing for
Right.
a rate that they're not going to keep for 30 years. So there's a lot of confusion out there and misinformation out there. There's different rates between condominiums versus single family homes. There's different rates between loan amounts, 110,000 jumbo loans. So I feel like we all kind of get this information in passing while we're in the car, or we see an ad on Google and we see a rate,
Right.
but that may or may not apply to a specific buyer's situation. Could be lower.
I had a buyer just like that, and he's like, well, my friend had this rate. I'm like, were they buying a condo? They're like, no, single family. I was like, did they put 20% or more down? He goes, yeah. I'm like, you're putting 10% on a townhouse, and it's, you know, I mean, how was their credit? Was it, so it's a big difference for each person. So when people ask me like, how are rates right now? And I'm like, it depends.
Yeah.
It really depends. You know what I mean?
I mean,
Well, that's
generally
why-
they're pretty good right now, but
Yeah.
it does
Yeah.
depend whether you get a 3.2 or a 3.7 or a 3.6. It
Well,
just
that's
depends on situation.
Yeah, that's why I love what you said. Find somebody local, because you see these things on Google, you see these advertisements. They're not going to take the time to go, okay, give me your 5-year, 10-year, 50, 30-year plan. Tell me why you're buying this. It's like, oh, let me pull your credit. Let me pull this. They're not going to run into these people at the grocery store. A lender like you is trying to build that relationship. So definitely local is the way to go. So I wanted to talk quickly about down payments. So I know that a typical loan, a conventional loan, is 20% down. So what's going on now that we've you guys in the industry have been up and down with what banks are doing? I heard that Chase Bank said a minimum of 20% down. We're not doing 5%. We're not doing 10%. We're not doing anything but 20%. So
Right.
Can you kind of go into down payments, and then also people, especially in LA, we're not sitting on a lot of money, kind of what a gift payment is and who can help with a gift?
Yeah, definitely. Really good questions. So what we've seen in the last 6 weeks has been an amazing, turbulent, chaotic time in the financial markets as well as mortgage. And all of this uncertainty around the economy and around what's going to happen with COVID has caused some lenders to tighten up their guidelines, tighten up their requirements.
Yeah.
Now, what we're talking about is individual investors and individual banks making decisions based on what they're comfortable with in this environment. But what we haven't seen is broad sweeping underwriting and guideline changes from the agencies such as Fannie Mae and Freddie Mac. So there's a difference. I
Okay.
say that because I think what buyers and realtors are going to see is that some lenders and some banks are going to pull back a little bit and maybe do things a little bit differently. And then others, such as Chase Bank, is going to be very aggressive in pulling back and becoming more conservative over the matter of a few days. So changes are happening very quick. But all that being said, a buyer can still get in with 3% down up to loan amounts 510,000 or less. They can still get in with 5% down up to a loan amount of 765,000. Certainly 10% down, we're closing deals using a first and second loan option in conjunction and closing deals at 1.1 or 1.2, 1.3 million using a first and second, but only putting 10% down. So I would say a lot of those products where a buyer can still produce full documentation. We're not talking about easy qualifiers. We're not talking about stated income loans. Those have really, for the most part, gone away. But if somebody can show income and show tax returns, they can still utilize 5 or 10% down for many, many situations that we see here and around Los Angeles and Glendale. The guidelines might be a little bit tougher just in terms of verifying employment or showing bank statements with recent deposits to show that business is still strong. So there's some extra requirements given this COVID environment that we're in. But Anne-Marie, you know, you can still get in with 5% down. You don't need 20% down. Now, if you're buying something jumbo, so like if you're looking for a loan amount of 900,000 on one loan, or $1 million or $2 million, yeah, then.
What is the threshold for, you know, our viewers? What's the threshold for jumbo?
So the loan amount threshold is 765,000, and that changes from county to county. So Los Angeles County, high balance conforming loan amounts go up to 765,000. So if you're going above that, that's jumbo financing, and you typically will need in this environment 20% down. But as I mentioned, you can utilize a first loan at, let's say, 765,000, and then do a second loan of, let's say, 200,000, and buy a house with only 10% down doing that first and second. So some creative ways still to make it work.
Also, it depends on the type of property that you're buying, whether it's an investment or not, like owner occupied, if you're going to be occupying the property or not. Maybe
Yeah.
It kind of, you know, takes me into the next segment of it, but in terms of that loan part, if you are doing owner occupied or non-owner occupied, can you tell us the major differences there?
Yeah, that's a really good point. So there's big differences between, and there always has been big differences between owner occupied, meaning somebody's going to buy a home to move into and use as their primary residence, versus somebody buying a home that they intend to rent out to tenants immediately after buying.
A home duplex up to 4 units is still residential. So if you're buying 5 units and up, it's technically commercial, right?
Exactly. So 5 and above units, that's commercial residential financing. But you know, 4 units and under, it's a different category. So yeah, there's big differences, not only in terms of down payment. So when we talk about 5% down or 10% down, we're talking about people that are buying homes to move into as owner occupied. If it's an investor in this environment, I would say minimum 25% down in most cases. Technically, there might be some 20% down options available, but the rates are priced out of the market, so it doesn't really make sense. So I would say investors in this market, 25 to 30% down. The rates are going to be typically 0.5% to 0.75% higher on investment properties. And then, Andrea, as you mentioned, if it's a 2 unit or a 3 unit or a 4 unit, that could also lead to pricing add-ons where the rate can become more expensive. So
the good thing about 2, 3, 4 units is that you can also use the income from those units to get qualified for your loan. So it's kind of like backwards, whereas regular residential single family condos, you'll, you know, go get your pre-approval and get all that stuff done and ready to go beforehand. But with this, you kind of have to have a subject property with a letter of intent, correct? And you go in and write in all the factors and prove that, hey, this is how much rent these units are getting and whatnot. So, and that's another animal.
Yeah, right. When somebody goes to buy a multifamily building, the pre-approval is constantly being adjusted and updated because every building has different rents, and we can use 75% of those current rents towards qualifying.
Awesome. I love that.
It's great, but to your point, having that relationship with a lender is super important because every property that an investor sees, we're gonna have to tweak the numbers and make sure, okay, the rents are this, 75%, okay, down payment's this. So it's a little bit more involved, but.
Absolutely.
So we actually got a question from Hanley Rivas. It says, are there any special incentives that armed forces veterans should be aware of at this time? Angel, you could probably take this question because
we're talking about the loan process, right? Loan. VA loan. Let's see.
Well, I'm guessing.
Yeah, do you want to type it in, Angel, or you want me to?
So The VA loan, Brian, you're gonna know. I mean, I'm a veteran, so yes. But there are incentives, but there have always been incentives. I don't know if there's any new incentives.
She's a veteran / our drill sergeant here.
Yes,
at our team here.
Yeah, so thank you for your service. I served in the Army for 8 years. I was a sergeant in the Army. But it's 0% down. There's no PMI, which is private mortgage insurance, which saves you a cost for your monthly. And usually private mortgage insurance is required if you are not putting down 20% on like a regular loan. So that's an incentive for someone that's buying with a VA loan. Are there any new incentives, Brian?
Nothing really new right now, guys. There's no tax incentives or extra incentives, but as Angel said, the VA loan is fantastic. So for the veterans out there, thank you for your service. You have a great benefit of getting a fantastic loan with that always has, usually very, very good rates, no PMI. The only caveat I would say is if you're looking at condominiums or townhomes, you just have to be finding one that is VA approved because many are not. But if you're looking at single family homes or multifamily, like a 2-unit, VA loans for those that qualify are fantastic.
I do want to add to that, sorry, real quick. So Hanley's asking special incentives. So there are down payment assistant programs that we didn't really touch on. For instance, I know, Brian, I think some employers can help. So it could be one of the benefits with your employers. There's also nonprofit agencies. And again, Hanley, I'm not sure if this is kind of where you were going for incentives, but kind of backing up just a bit for the down payment. The VA is definitely one. There's government agencies, nonprofits, and special niches. Like if you are a teacher, there are some incentives and options with that, as well as doctors. I think, Brian, you guys have a doctor.
CPAs, attorneys, there's different like portfolio type of loans.
Yeah.
And there are,
go ahead.
I was going to say there are down payment assistant programs out there that we can send you the information to. The Cal HFA VA program, the Cal HFA USDA, 203K. So there's definitely options out there for that special incentive.
I did have one more question, Brian. For the VA limit, what is the loan limit for 0% down?
Good question.
So, yeah, great question. So there's been some changes recently in 2020 where the loan limits have increased. For sure, 0% down up to 765,000. So that's not a problem. And above 765,000, it's still possible to put a very, very minimal down payment and still get VA financing. We've done VA loans with, 5 or 10% down above $1 million with no mortgage insurance. So case by case, we have to look and see what the borrower's entitlement is and what their qualifications are. But you can go quite high with very minimal to 0 down payment.
That's really great.
And we can get all this together in an email for you. Hanley's one of my friends, so if you want, we can put it all together for you in an email and send that over. And if you have any other questions, just feel free to type them out, or if we didn't touch up entirely on what you wanted answered, just send us a chat.
And I know we were talking about it earlier, but Andrea, do you want to talk to us about investing? I know
we were talking about, investment loans, how to get them, what the qualifications and whatnot would possibly be. But in terms of investments, is it a good time to invest? I think it depends on the type of buyer that you are. If you're a savvy buyer that has a lot more liquid cash flow, and you have other different types of investments, because the biggest concern here right now is, are people going to pay their rent, right? With the whole thing going on. If you have properties that have vacancies, people are like, should I hold from, renting it out? In my mind, because I do property management as well, why would you do that? Get somebody in there, because they're going to have to pay a deposit and at least first month's rent to move in. So that's money in your hand. And after they've signed a lease agreement, whether they pay within these next month or two, which is, the part that they can be excused, they still have to make up those payments. They have an agreement with you to pay you a certain amount. And I think in LA and Glendale, they have up to 12 months to pay the money that they didn't pay you back. So vacancies are a landlord's worst nightmare. And I would rather have somebody at least coming in with at least a down payment or deposit and, at least first month's rent. And
Right.
it depends on the type of buyer that you are. If you have the money to be able to make your mortgage payments without it, that's a possibility. And if you don't, you really got to think about that. What is the possibility of, me being able to pay without these people having to pay their rent? At the end of the day, you'll make the money back, but you don't want to not default, but like you don't want to get late payments. And my dad, who's also a lender, he was telling me that people that stopped paying their mortgage, their credits has already started dinking and they've been marked as delayed and late. So it's like, you gotta realize, is it worth for me to go a couple more months and wait before I invest and all of this is over with, where people are actually more required to pay their rent and whatnot? But either way, you'll make the money back. Each person is very different, and if you have specific questions about yourself, I'll be happy to address them specifically to your situation.
I think another important like bring in too is that you're able to make sure that they have really good job security, and right now I think everyone's realizing who has job security and who does not. So like if you do get a property that you're trying to rent out now, the people that are going to be applying to rent, depending on, the different area and different situation, are going to be very serious renters with job security. So that's also a benefit, So I think that if they're holding job security through what's happening right now, it's a really good indicator that they're going to be a great tenant in the future.
I do see people that, like, even my own family's tenants, and I do property management too. I expected a lot less people to pay their rents, but I think people are getting smart about it because they're like, oh, it's not like it's
Pay it anyways.
huge. You know what I mean? I'm gonna have to make this back, whether it's adding an extra amount on top of every month or doing a lump sum. And if I don't, my landlord will come after me.
Right.
You know what I mean? So they're like, I'd rather just go ahead and pay it and keep going the way that I was before and not come up with a whole bunch of things to have to deal with afterwards.
Mm-hmm.
So that's what I'm saying so far with the properties that I manage and whatnot. So
thank you for that. We do have another question. He says, thank you all so much. This is great information. Last question. What are the current annual property taxes for LA County? Isn't it 1.25%?
Mm-hmm.
About
on average, you can do 1.25.
Yeah, an average of 1.5%.
Yeah, as a lender, we use 1.25% across the board to qualify, but city to city, it could be a little bit lower or it could be a little bit higher. I just got loan documents out on a property in Montebello yesterday, and the property tax rate in Montebello was like 1.31. So I think 1.25 could be a little bit lower. It could be a little bit higher. And then certain areas, like for example, like a lot up in Santa Clarita, there's special assessments, Melrose. So it kind of depends on where the property is, but 1.25 is a good place to start.
Yeah, good question.
Yeah, thank you for that. And then Brian, I know we kind of touched on it like briefly earlier about like, okay, if someone calls you, are there strings attached, what to expect? And you were saying how, you'll assess them for like a 15-minute phone call. Can you just go over quickly about what the loan process is kind of like with you, like getting qualified for a loan, what to expect when someone calls you? What things should they have for you to make your life easier, all of that?
Yeah, so the way I typically like to do it, which is the way I think a lot of really good lenders in the area do it, is we basically want to pre-underwrite the file up front. So some buyers call places, even I've heard of, banks like Chase Bank, they'll issue pre-qualifications sometimes without looking at any documentation, which is not very reliable. So what we like to do is look at income, assets, credit, if possible, and we want to basically make sure that that buyer is meeting the guidelines for the loan situation that they're looking to do. So it's really an educational process for the buyer to understand what steps are needed, what their debt to income ratio is, what their credit scores are, what assets they need to qualify, okay? And then it's also good for you as the agent to understand that this buyer is looking at properties in their price range that they're well qualified for, so that everyone can use their time most efficiently. But the process itself is fast. I mean, it doesn't take very long. Once we get the documentation back from buyers, you know, we can typically turn around the pre-approval within 24 hours. The pre-approval is good for 6 months. There's no cost for it. There's no obligation for it. So it's really us trying to be of service to the buyer and to the real estate agent, to give really good information, to give counsel when asked, and to provide a game plan as to, you know, what steps need to be taken so that the buyer puts themselves in the best and strongest position possible.
Yeah.
So, did that answer? Is that
It also looks like, I don't know if you guys saw this, but we got another question from Cheryl. It says, what if gift money is compromised of different contributors, excuse me, parents, grandparents, aunts, and uncles contributing, but it's presented to the bank from one source? Is that wise? Can there be different sources? And is there a limit to how many people you can get gift money from for a single down payment?
Yeah, good question. So technically, there's no limit. I would say it, you know, for every gift that comes in, we need to paper trail the gift via a wire transfer receipt, as well as gift letters signed by the donor as well as the buyer. So if you have 20 gifts coming in, which we've had before, it's just a lot of paperwork, and it can be expensive because you have a lot of different wire fees going in escrow. So I would say if you can consolidate to some degree, that'd be great. But you know, you can have one gift for mom and dad. You can have, you know, 5 gifts for mom and dad and uncle and cousin. That's fine. There's really no limit to that.
Great.
Thank you for that. I do want to also add, because I've seen this multiple times, when we kind of touched on it, really is important who your lender is, especially locally. In every which way, even right now for showings, right? The fact that I have clients that are pre-approved with House America Financial, like they're willing to let my clients go see because they know that that name holds weight, which is where, you know, Brian is with. And so, and an offer, a lot of times they want them to cross qualify with another lender, and it's usually always a lender at House America Financial. And so it just shows that their reputation is that they're closers. So if they put their name on something and on an offer, no one's worried that the loan is not going to go through. I know that this is like it might be a little bit advanced for some people's like understanding, but in a market like today where there's so many offers that go into like on a property still, who you work with as your lender is very important too, because it gives that seller and their agent, which is advising them, confidence that they're not going to back out of the deal, because they know if they're pre-approved with certain lenders like Brian himself, that they're going to be able to fulfill that loan.
Yeah,
I'm going to bring that up because I even had that today for a showing, which was interesting times, right? Not just for an offer, but for a showing.
Yeah, I think thank you, Angel. I appreciate the vote of confidence. I mean, I'm blessed to work for a good company. I have a lot of great colleagues at House America. And, you know, I think we're one of many good lenders. I mean, certainly we're not the only ones, but by the same token, there's a lot of lenders out there that aren't very good. And so I think you gotta, you know, any successful transaction involves a great team of, you know, really great agent, you know, good lender, reliable lender, good escrow. And if any one of those links is weak or sloppy or unresponsive, the entire transaction could fall apart. So,
A lot of money.
so true.
Yeah.
A lot of money, yeah. Time and money wasted for sure. But I'm so grateful. Is there any other things that you guys want to touch on before we wrap everything up, just to be be like, conscious of everyone's time.
No, I just wanted to kind of recap, like, this is the second time we've done with Brian, and things have changed. Lending standards have changed. And the reason we wanted to bring it to you guys is because most of us are at home. Most of us have some extra time. We wanted to ensure you that real estate is an essential business. It's still happening. Obviously, loan process, mortgage brokers, banks are essential. So if you're not thinking about buying today or tomorrow, check out your credit score like we talked about. Go on Google and investigate the different programs that are out there, whether it be your employer, nonprofit, government agencies. Do the homework now. And as Brian said, these pre-approvals are going to last for 6 months. So start that conversation.
Be prepared.
Yeah.
Yeah, get prepared because COVID has changed the way that we are doing real estate right now. You need to be pre-approved to even see a house. The days of open houses are probably going to be long gone. It's going to be virtual. Agents are going to be asking for those pre-approvals to even get you into the house. So start that process now. We are all here to answer any of your questions. Even if you're out of state, we've got resources. We work for Coldwell Banker. We're in 49 different countries. We want to provide value to you guys. So.
Absolutely.
And I also want to add on to that too. A lot of times I've been getting asked this question the last few weeks over and over again, like, when do I start the process? And it doesn't matter if you're looking to buy in the next year or 2 years, it's always a really good time to start the process, because the last thing that you want to do is have this standard of like what you think you're going to buy or what you want to buy. And then you didn't set yourself up with like the down payment and your credit score and income and things like that to be able to make that happen. So even if you put a plan in place with your, realtor and your lender, and you say, hey, this is really what I want to buy. I'm not buying unless I can get this, and I have time before I want to buy. Put a plan in place to make that happen, because we just would hate to see someone get disappointed. It's just never too early.
It's far too many times, and it's almost like we're the bearer of bad news, but it's like, there's reasons why we want to talk about these things beforehand, so that we are able to accomplish the goals that you want to accomplish. And you are able to do it. It's just, how do we get there, and what do I got to do on a monthly, weekly basis to make sure that I can reach that goal? And we'll help you, hone in on those type of details.
And then the last thing I want to say too is, I know that this has been another thing that's been a lot talked about a lot the last 6 weeks, is maybe we should wait because prices are going to drop. And I heard that 6 weeks ago, I heard that 5 weeks ago, 4 weeks ago, 3 weeks ago, 2 weeks ago, and still this week, and prices have not dropped.
Don't hold your breath, you guys.
Yeah. So if you're in a place where you have stability and security in your job, you have the down payment that you need, and you're pre-approved for a loan, now is an amazing time to buy, because half the competition is gone and it's only serious buyers. So even in the hot pockets where there might have been 25 offers on a home, you might only have to deal with 6. And so that is definitely a benefit. And if a seller has to sell because of what's going on, then there might be leverage on you buying. So just don't wait. Everyone keeps saying, I'm just waiting for the prices to decrease. It hasn't happened. It's still not happening. The market is.
Let's really touch on why. The only time that house prices really will decrease, you guys, is if inventory raises. If you've been considering, even just considering buying a home within the past year or two, you realize that there's not that much on the market. And when it does, there's lots of people interested in it. On top of that, rates are fairly low. I mean, they're pretty historically low. Mm-hmm. They're still really, really good rates. And so the only time you'll really see a price drop is if there's more houses going on the market. And people think like, oh, with COVID, people don't have homes or people don't have jobs. Are they going to be able to make their mortgage payments? Are they going to have to sell? It's like, the inventory has been so low because people have been holding on to their properties. What does that mean to me as a realtor? They have more equity than anything else, right? I mean, they've been making these payments for properties that they've been holding. So they have plan B. The whole reason why they got into purchasing a home rather than renting is so that they have that stability. People have equity in their homes nowadays. So they can really kind of ride this even if it goes for a year, like a year or two on, and it's not, you know what I mean? Like we see that this thing's gonna be done in a month or two, you guys, max, in my opinion.
I mean, we're already starting through the phases of
Yeah, you see positive things now all the time.
Yeah. But I just wanted to touch on that because I know that there's people out there that are watching. I have a lot of my girlfriends that have even said, hey, Angel, I'm young, I'm 25, I have no idea where to begin. I don't know how to start the process. Buying a home is intimidating. And so it doesn't have to be intimidating. Get with a real estate agent, if whether you're here in LA or you're somewhere else and we can help recommend, but get with someone that you trust. Get with a lender that you feel comfortable with, someone that's going to sit down with you and they're going to go over everything. None of us will ever make you feel like you're too much of a rookie. We're going to hold your hand throughout the entire process. And I want to make buying a home exciting, right?
Yeah.
And fun, and like not be intimidated by it, because that's one of the things I've heard recently is like, it's intimidating. I don't know if I could do that. I don't think I could buy in LA. You'd be surprised by how many people think that they cannot purchase a property in Los Angeles and then they become homeowners with us. So it's never too late to start. And we have a very compassionate and open and expert team in all different areas. So just ask the questions, like, and just get in contact with whoever, and let's,
Yeah.
Start it going. Let's start those discussions.
Yeah. Sorry.
And thank you, Brian, so much for your
Thank
time
you so
again.
much,
You
Brian.
are a
Very
wealth of
much.
knowledge.
You're welcome. Thank you, guys.
Appreciate it.
We appreciate you guys.
And if you guys have any other questions, of course, on our YouTubes, you guys, we have a bunch of different videos that we put out with a bunch of little facts and details here and there. But if you guys want us to cover anything specific for you, go ahead and drop those, comments in, the comment box, or
Survey monkey.
Yes, fill it out. Fill it out.
we just want to give you the best information. So that's really helpful for us to be able to do that.
Yes.
Thanks,
Thank you guys
everyone.
so much.
You guys so much. Have a beautiful day.
Bye.
Thanks, guys. Thank you.